Welcome to this week's Mortgage Insider Update. Right after the press conference is finishing, Fed Chairman Powell has announced 0.75% or 75 basis points hike in the federal funds rate. That means if you have a home equity line of credit or a credit card, the interest rate's going up. Let's dive in and see what's happening in the markets as this is taking place today. So what we're looking at is the 10-year Treasury yield. We actually saw last week a spike to the highest point we had seen since 2008 on October 21st, and a slight pullback or just a leveling off to levels that we saw at the beginning part of October. For the most part, we've just seen elevated interest rates, and that makes sense since it's been well documented and well said publicly that the federal funds rate was going to go up 75 basis points today. Everything that was anticipated happened. So in anticipation of that, the press conference that Fed Chairman Powell just completed, markets have been volatile, to say it mildly here. As I've been watching this, the 10-year Treasury is actually down. It's been up slightly. It's been significantly lower just in the last 30 minutes. And then on the mortgage-backed security side, these are the actual securities being sold by mortgage companies to investors. So the investors will pay a lower price on the bond, or ultimately that will net them a higher yield or a higher interest rate that consumers pay. So October 21st was the lowest point in the price to the mortgage-backed security. We saw it bounce back in anticipation of the meeting today, and the last few days, including October 31st, that ended just on Monday, we've seen basically a flattening. We did see some exuberance. The mortgage-backed security price has gone above the 25-day average, basically 4 of the last 5 trading days, and is still held currently below the average. That just means that we're likely going to stay in this channel, this lower price, higher interest rate environment, until some major event changes the path of the Fed. Currently, the federal funds rate is anticipated to go up at least 50 basis points at their next meeting in December. It could very likely go up 75 basis points, all dependent on data. And that's what the Fed said today. The data will tell all. They are looking for multiple months of reduced inflation. We got an inflation reading, the PCE, which is actually the Fed's favorite measure of inflation, came out last Friday, just under expectations. I think they expected the core inflation rate to be 5.1. It came out at 5.0%. So that's basically at expectation, which is significantly higher than the goal of 2% inflation. So all things being equal, the Federal Reserve is going to continue their stance that they're not going to change or even hint at a change in their policy until they actually make that change. It could be December, it could be January, and the Fed chairman did acknowledge that pivot or that change in their policy to not lower the rates, but just slow down the pace of their increases is likely in the next coming couple of meetings. He didn't specify when. It could be December, it could be January. All this is going to be dependent on inflation rates coming down. So we'll keep an eye out for you and be in touch next time.